So today we're going to do 6 updates with what's gone on with the stock market this week. It's been a busy week in the stock market, and we've hardly really covered a lot of it because we've been focusing a lot on individual stocks. And yeah, there's been a lot of news out there, so I'm going to put all the stocks that we didn't really talk about and all the news that did happen this week into one massive Friday recap. And I think there's 6 stocks we're going to cover on this list today. So hopefully there's at least one stock that is interesting to you guys. And yeah, let's get started. Before we do, I did actually just drop a US portfolio review for September 2025 on the Patreon. So if you are a Patreon member, do go check that out. If you do want to join the Patreon, you can join with the link in the description, guys. If you do go join the Patreon, just make sure you are joining through the web browser rather than the app, because the app charges you an extra 30%, so save yourself some money. And if you do go on it and you do click come on, become a member, it's £6 a month, but if you do click the option to pay annually, you do get it for 15% cheaper, and that works as £5.10 a month, which is cheaper than a coffee from Starbucks that I found out the other day. So yeah, it's not too bad for hopefully the content you get on there. I try to give you guys 2 exclusive videos a week on there, but I've actually been doing at the moment a little bit more than 2 exclusive videos a week on there. So yeah, if you do want to support the YouTube channel, go do that, and I appreciate everyone that does subscribe to the Patreon as well. And as well as that, if you do want to start investing, join the link in the description to eToro. I'm a popular investor on there at the moment. We currently have a 37% year-to-date return, which compared to the S&P 500 is 12%. So we are outperforming the S&P by 3x, which is obviously pretty good performance there. So we're going to start off with new holdings, the number one. I've not talked about this actually recently, and it's been on my list to mention it for a while. Currently up 28% in the last month, having a really good month. I missed this information until Luke on the Discord, which you do get the Discord with the Patreon as well. I posted it on there, and he posted that New is looking to expand into Argentina, and there was actually an advertisement put out on LinkedIn for a role in Argentina expansion, and that has been expected that they are going to expand. I think when I did the earnings review on the Patreon for New Holdings a couple of weeks ago, I said that I think by the end of the year they will announce that they're expanding into a new country, and even though it's not officially announced, I guess that kind of once again confirms that okay, it's probably more than likely going to go live in the next 2-3 months potentially, and it looks like Argentina is potentially going to be the next one that they do launch in, which would be great because that's a great market for them to go into, very close to where they're at the moment. So it should do really well for them. And the financials have already been pretty good for New Holdings. Great profit growth, great revenue growth. But obviously launching into Argentina is probably more than likely going to accelerate these growth rates now into the potential like 40% ranges. And when you start talking about New Holdings growing at 40%, and even right now, after the rally that it's been on, the company is still realistically at 19 forward times earnings, which it still seems very cheap for a company in my point of view, and that's forward P for this year's numbers. So what, we're about 3 months from that point of view. I think that's a bit too cheap for someone like a New Holdings. And there's been part of me thinking, okay, I'm going to lock a little bit profit on New Holdings with the rally that it's been on. But at the same time, I'm kind of like, do I want to? Like 19 forward times earnings, I think this could still be significantly a lot better price than where it is right now. So yeah, at the moment I've not sold anything. It is a thought that I'm having, but I keep thinking that, why would I want to sell at the moment? But once again, it's great to see. This was a stock that was a bit more of a priority between like the 2024 period into the early start of 2025, and this is what I say to you guys all the time. If we are going to be successful in the stock market and achieving outperformance in the S&P 500, we put the new blood in, and then it's really key that in the next couple of years they then kick on. And New Holdings is a perfect example of the new blood coming into the portfolio and then starting to bring the returns in, which is obviously great to see. Next stock I'm going to talk about, a stock that I've never covered on the YouTube channel before. I did give it a little bit of a mention on Monday though in the earnings preview, which is Synopsys, and this has been the US stock of the week. I mean, not the UK stock of the week. We know which the UK stock of the week has been for the big drop. But This has been the US stock of the week, probably for the drop and being talked about. Pretty significant drop, although there's been a bit of a rally, about a 10% rally, and some buyers coming in for it. And but yeah, this dropped 34% after their recent update. The recent update, I think they did a bit of a profit downgrade, and I think there was a bit of a miss on the EPS and revenue point of view. And I originally had a bit of a look, and I thought, well, the company is expected to grow at 37% in the next quarter, and next year 38% growth. It is profitable. It's trading at a 31 forward times earnings, and then I realised that the reason why the growth is surging up is that they've actually made an acquisition, and the acquisition's a pretty, a 35 billion acquisition, which whatever Synopsys is an 80 billion, yet it's half the market cap. That's a significant purchase. So no wonder that this company is boosting up on the revenue point of view. A lot of it is acquisition related. And when we were looking at the natural growth of the company without the acquisition, the growth had actually slowed down to a 10% range-ish. It's been bouncing about all over the place, but 10%, maybe mid-teens growth. And I thought, it's not amazing. And then I looked at the balance sheet as well, and from the acquisition now, they've gone from a position where they've gone from a clean balance, well, not a clean balance sheet, there was 15 million on there, which I guess is nearly a clean balance sheet, and now it's a 14 billion of debt on there. The cash pile has gone from, I think that jump in cash probably was from some sort of the loan agreement that they took on, but 3.8 billion of cash pile, it's dropped down to a 2.5 billion of cash, and it's not great, is it? So yeah, this was one that dropped this week, and I thought, I said if it had a drop, I'd be quite interested in it. And then I looked and I thought, realistically, it's not really growing that great. It's only because of the acquisition point of view, and the balance sheet is a little bit of a mess on the company. I was like, not one for me to look any further. So that's one that did caught my eye this week, and I didn't go any further with the look into that stock. Moving on to number three here. Well, not number three. We're going to talk about the inflation data, because we did get some inflation data on the US markets. The market basically didn't really care about it, which I was quite surprised by. I think, like what I said on Monday, is that unless there's a free in front of the inflation data, it won't be bothered. And obviously we didn't get the free, so it was like, yeah, that's fine. There was a little bit of a tick up on the inflation, but nothing too major. I think, like I said, I think the data has been getting so weak now that I think the Fed has kind of finally realised actually we need to deal with something here about this weakening economy, that whatever happened with the inflation data, it was going to go for the cut, and like I said, I always like true inflation, and true inflation still sitting around the 2% range. I think that's a lot better measurement of data for the inflation rate in the US, and that's obviously bang on the target. And I think the Fed had to react to the data that is weakening in the US, and it's a little bit disappointing, because obviously, I pointed out in January that this data is getting a little bit weak, and I said that in the next few months we'll start seeing it get worse and worse if the Fed don't do anything, and now they're finally doing something. But is it a bit too late? We'll see what happens. I'll be interested to see what the cuts they do. At the moment the rumor is, well, the expectation is that it's going to be a 25 basis points cut. I really think they should be considering a 50 basis points cut. But I think there's only like a 10-15% chance or something like that of happening. So I don't think it will happen. On the UK front, pretty poor data coming out from the UK today. UK economy saw zero growth in July. Obviously very disappointing. And considering as well, it was such a good July. The weather out there was amazing. Fifth warmest on record. It hardly rained. There were no excuses around the weather. Everybody out there on the summer holidays, good mood and all that. Sun's out. You're not going to get any of a better mood than that. And yet the UK economy only didn't grow at all. Imagine if we had poor weather. Imagine if we had one of those summers where it just absolutely poured it down. Imagine what the growth would have come in then. So that's really poor to see that. But yeah, obviously not great from the UK point of view, and it just leads on to when we get to the budget, which I can't believe how late that's been left. Obviously that's the clear hope of that growth starts kicking in by that point of view. So they have a little bit more wiggle room, but I don't think that's going to happen. Obviously leads to the budget of what they're going to do. You're raising taxes on an already economy that's slowing down. It's going to be hard work to do it. If you do that, then obviously it's going to get worse from that point of view. But I guess, the positive that I take from it is that it's good to, we've not had a government that has come in from a point of view and thought, oh, we're going to, for a while, we've not had a government that comes in and goes, we're going to tax ourselves to growth. And it's a good reality check that for the people that thought taxing to growth would work, it hasn't. So, next time someone says, oh, taxing for growth will work, you can just go, but what happened in 2025? But yeah, we'll see what happens from that point of view. Hims and Hers having a pretty good bounce this week. This week is up a good from these September lows. At the start of the month, up about 23%. Good to see they launched a new product, as you can see here, which is plans for low testosterone levels. And once again, I always say this about Hims and Hers, and there's all this talk about GLP-1, and that's been the talk of the company for the last 12 months basically. But people forget, there's so many TAMs that Hims and Hers still have to go into. They've just entered this TAM here, and you can see that this TAM is worth 2.93 billion. Well, that was in 2023. These TAMs that they go into, you're talking multi-billion markets that they just keep entering, and every time they enter some of these markets, and if they just take, I don't know, 10% share of that market, and you're talking 300 million. Well, when you look at Hims and Hers, revenue for the last quarter, 554 million. So, there's significant amounts of money that can be made in these markets, and as they keep entering them, they should do really well. And that was, really good to see from Hims and Hers once again, launching into new markets again. Next one, Audioboom. What a performer this has been. Up in the last year, 157%. I think I'm up 77% right now, which is great to see. And, that's, once again, a prime example. I just see so many times when we see a UK stock go down, we've had a prime example of one this week, haven't we? Every time UK stock goes down, you just see so many people go, oh, that's why I don't invest in UK companies. And it's such a naive point of view to have. Like, it really, really is. There's some quality businesses to be making money on in the UK markets if you can find the right ones. And Audioboom was a great valuation at the start of the year, and obviously I bought it. Made plenty of videos about it when I was buying it, and to be up, so what was it, 77%? After being a brand new stock in the portfolio, I didn't really expect this return already, but it's obviously great that it has done. And as I was reminded on the Discord yesterday, sometimes I said this to myself, is like sometimes I get so caught up on talking about the next opportunity and chasing ready for the next money that sometimes, and after this week as well, is that I think it would be a lot better if I also reflect and say, like, look at this stock that we talked about and look at the returns that we've had from it. And I think that's the case with Audioboom. But with Audioboom at the moment, I think what's been happening is there's been a couple of EPS upgrades as people realise, like, this company's actually going to be doing decent amounts of profit, and the profit's going to be significantly growing faster than the revenue at the moment. But I think what's also caught the eyes here is that I've seen so many more people talking about it. Like, from where we were talking about it a few months ago, there wasn't really that much interest in Audioboom. But I've noticed, listening to a few more UK talkers, speakers around the stock market, like, it's getting the attention a little bit. And I think as well, like, it's come a stock as well for the momentum traders a little bit as well, which you've got to be a little bit careful on, because these guys, will very quickly jump in and out in a stock and jump out of a stock. And that's the only thing that does kind of make me nervous with how much the stock has gone up recently, is that, is how many momentum traders are potentially in there. And, they can very quickly, as the stock has gone up, move away from the stock, and that's just something that I've been really, careful of. But yeah, it's been a really secret, maybe not secret, but good performer so far. Adobe, I'm going to keep this one nice and brief because I'm going to do a full earnings review of Adobe on the Patreon over the weekend. But just wanted to mention it really quickly. Stocks is red today, which I don't know how it's red. I think after the earnings when they did come out, the stock was up like 7-8%, I believe, and then it just kind of gave it back a little bit, and now it's gone red, which is unbelievable. Like, the earnings that Adobe have just brought out were very good, probably like 9 out of 10, 10 out of 10 good, and they were good for a company like a decent valuation. But when you take into context the valuation of where Adobe is at, they are very good. And the fact the stock has gone negative is, it is a little bit frustrating, especially when you look at the earnings and, EPS beat, revenue beat, and then hike up the guidance, triple beat, especially when you've had a week where you've seen, stocks that downgrade the outlook and you get whacked 20%, and then you finally, you have a stock that brings out some really good earnings, and then it's like, well, hold on, if it was the other way around and this was in the wrong direction, you would have whacked the stock 20% down, but then we get it in the right direction and you get no reward for it. It can be really frustrating, but, over the long term, as long as they continue to execute, the stock market will realize and will reward us for that, hopefully. And that's the key thing to always remember about the long term. We saw it with Google this year, where they were bringing solid results out. The market kept throwing it lower, and now we've got the results. We saw it with AMD this year, and exactly the same happened. So yeah, if the market wants to play stupid games, I'll take the stupid prices, and we'll hopefully make more money from it. So I think I said on Monday's video, there's been a lot of references to Monday's video here. But I said it on Monday's video, like, my ideal situation here is that Adobe brings out a solid earnings report, but the stock goes down. And we've got that. We've seen them bring out a 9 out of 10, 10 out of 10 earnings report last night, and then the stock's gone down. So I can't complain because it's what I wanted to happen. So we will take that opportunity. Last one I want to talk about is Opendoor Technologies. I want to talk about this because it's another example, like, you start talking about, are we in a bit of a frothy market? And you are starting to see a few more of these examples where you're starting to see maybe the signs of a frothy market coming back. And you got a stock up here, up 274% in the last month. And when you start to see the rise of these meme stocks again, these companies that are declining revenue, the profitability, they wish they had profitability. Losses of 235 million, and that's going to increase next year to 277 million. And yet you're seeing companies go up to 275%. You're seeing companies valued at 7.2 billion for a company that's declining revenue and with losses that are declining even more to 270 million losses. I mean, I don't even know if they've got the cash on their balance sheet to survive much longer. Yeah, well, they've got a couple of years life left in them, but 7 billion valuations for these sort of companies, and you start seeing things like where the reason why is because the old CEO is coming back. This is the same CEO that bailed out in 2022 when the revenue went from these amounts down here, and the losses just massively increased. It's mental, isn't it? And you always think, like, you keep questioning yourself a little bit, don't you? Like, are we in a bubble market? And then you look at a few things like, no, we're not in a bubble market. But then I saw this one this week and I thought, when you start seeing things like this happen, you do start thinking, are we getting a little bit frothy here? Because these things should not be happening in the markets, and they are. So, I don't know, just one of those, another signs this week where I went, it's getting a little bit ridiculous out there, but it is what it is anyway. So, just a couple of updates there. Hopefully it was a little bit useful. I don't know if I'm going to do some videos on the weekend on the YouTube channel. I'm going to try, but it just depends on time. I was planning on doing maybe a video. A lot of you guys have asked for a video on Lululemon potentially on the Saturday. I'm going to try to get a special video together for you on the Sunday. It just depends how much time I've got to get that video together for you. We'll see what happens there. And then if not, I'll see you on Monday anyway. So have a great weekend. Maybe I'll see you on YouTube. Hopefully I'll see you on the Patreon on some of the exclusive content. But apart from that, yeah, see you in a bit.